Hello, I'm Rhonda Porter, mortgage advisor from the greater Seattle area, and I'm here with your weekly mortgage rate update for the week of May 26, 2025. Fannie Mae's most recent mortgage rate forecast shows mortgage rates entering the 5% range, barely. And of course, there's no guarantee this is going to happen, but I do like to see the optimism that this shows with just even entering that range. So stay tuned as I ran some numbers to see if it makes sense to wait for a 5% rate that may or may not happen, or if you find a home that you want, if you should just go ahead and buy it now. Optimal Blue shows that mortgage rates as of last Friday, May 23rd, averaged about 6.922% for the 30-year fixed. So we're still within that really tight range between 6 and 3/4 and 7 that we've been in since early April. Please do remember that this Optimal Blue index is an average of about 35% of mortgage transactions or the lenders that use Optimal Blue to lock in their interest rates. And so we don't know how these rates are being priced, if they have points or what a person's credit scores are, or what the loan to value is, among other factors that are involved when you're pricing out a mortgage rate. So if you'd like a quote based on your personal financial scenario, please reach out to me. This week, watch for the Fed minutes to be released on Wednesday and PCE on Friday. The personal consumption expenditure report is the Fed's favorite measure of inflation, so this reading is not expected to have the tariffs factored in yet. Mortgage-backed securities are having a nice day today, and the stock market's doing well too, with talk of another delay on those tariffs against the European Union. So the cost of waiting analysis that I have here is based off of Fannie Mae's current forecast that I shared earlier in this video. And so it's based off somebody buying a home with it priced at around 800,000. I'm using projected forecasted appreciation based off of the 98056 Renton area zip code. And this person's putting 20% down and they have credit of around 740. And so with this scenario, if they were to buy and lock today, they could have a payment, including estimated property taxes and homeowners insurance, of around $5,000. They'd need about $179,000 for closing. So what if you waited 6 months based off of projected appreciation and the projected interest rates that Fannie Mae has provided us recently? That same house would have a payment of 4,418 if you waited for the second quarter of 2026, and so that the rate would be 5.9. So you come out a little bit ahead there as far as payment, but you're going to be paying more with down payment if you want to continue to do 20% down. If you waited until the fourth quarter, so the end of 2026, the home is now valued at roughly 867. Supposedly projections come true, and the rate is lower. Your payment would be 4,939. So again, you are paying about $64 less, but the big difference here is that you're putting down 193,512, and so it's costing you $25,000 more in down payment. The other difference to consider too is that if you wait that time, you're not getting the benefit of paying down your mortgage balance. So this last column is a what if. And again, we have no idea if these rates are going to come true or not. This is just a scenario to consider based off of information that's been provided us with forecasts. And so this is considering that if you were to buy the home now and then refinance when rates go down. And so with that scenario, you would wind up having a payment of 4,565 once you refinanced in the fourth quarter, and you would have a lower mortgage balance because you've been paying on the mortgage this entire time and getting the benefit of appreciation. The other factor to consider too is what if your rate goes up so during that time, which is a possibility. So bottom line, if you like the home and you can afford it now, I would suggest buying it now. Of course, the other consideration as well is that you have the benefit of enjoying the home now instead of waiting for it. Another factor too to consider is that when rates do come down, it's anticipated that more people will be entering the market to buy a home. And so that pushes up competition. It drives rates to go higher with bidding wars. And it may mean that that home that you want to have is no longer available because of that increased competition and more people interested in that very same home. So again, if you can afford it and you're comfortable with the payment now, it may be worth considering moving forward with that. And of course, I'm happy to help you with that. I hope you have a great week. And if you're thinking about buying, selling, refinancing, remodeling your home, restructuring debt, or maybe even a reverse mortgage, I'm always happy to help you, even if it's months away and you just want to talk about it. So take care, and I hope to talk with you soon. Bye bye.